This
Good
conference
morning
will
and
now be
welcome to the
recorded.
Empress of Biz. We are delighted to have someone special, in fact, two special gentlemen that have popped up into my life and who have lots of knowledge, that extensive knowledge that we can use. First, I want to introduce my co-host, Sal Acosta. Good morning, Sal.
Good morning, JoAnn, and good morning to everybody that's watching. My name is Sal Acosta. I'm a business broker with Landon and Acosta, and glad to be here and co-host with you.
Well, we're delighted. And I also want to get a strong shout out to Sal because he's the one that's technically arranging this. And we know the Empress of Biz, she can talk, she can make deals, but don't let her touch anything technical. Something's going to happen. So, guys, anything's gone wrong, I'll take the blame. Good morning, Jon. Jon's a
Good morning.
banker, Jon Fabyonic, and I'm just delighted to have you because one of the things that we do is try to make deals for people, try to make things happen, and financing is absolutely crucial. Welcome to the Empress of Biz.
I'm happy to be here.
Jon, tell me a little bit about what you do with First National Bank.
My position at First National is my focus is 100% on SBA lending. For those who are a little background on SBA, it's a government-sponsored program. It's actually been around since 1953. It was actually developed by President Eisenhower. The agency was originally created to help small businesses, obtain loans, and they provide other educational parts and things to help them get their feet on the ground and move ahead with their business. A little bit of a couple companies that are very well known that have started with an SBA loan. Chobani Yogurt, I'm sure you've heard of them. They're one company that was started. Also, Under Armour and Chipotle both have utilized SBA financing to get their start, and look where they are today. And there's many, many others, but those are just a few to name.
SBA has been a good friend, the Small Business Administration to small business, and that was one of the that's a prime mover often in getting small businesses started and helping them grow and expand. Sal and I have gotten together. We've known each other over the years, but we usually are on the other side of the equation. Usually I'm taking a look at a business deal saying, is this a good buy for my client? And Sal's usually on the other side saying, I have this as broker and this is a good deal for your client. And we know that the SBA often is an essential part of the process in obtaining a loan. Jon, there's a lot of misconceptions about the SBA as far as, do they directly lend money?
That would probably be the number one misconception. I answer that question all the time. People believe that the SBA is the one that actually lends the money. That is not true. What they do is provide a guarantee of the loan that it will be repaid in the event that it defaults. That guarantee amount could go from anywhere from 50%, 75, even 90 with different programs that the SBA offers. But the bank is guaranteed that that percentage of the loan will be paid back to the bank in the event the borrower defaults. But the number one misconception, like started with, is that the SBA is the one that lends the money. That is not the case at all. The bank lends it. They use their underwriting criteria to provide their decision, and then there's it's up to the bank to put that out there for the SBA. They don't have to approve anything because you have preferred lenders with the SBA. Many banks are one. You should, or non-bank lenders are a preferred lender. That's one question you should ask. That would mean that the bank doesn't have to seek any kind of approval from the SBA about their guarantee. If they're a non-preferred bank, they would need to actually get the SBA's approval before they could issue the loan with the guarantee.
Okay. Sal, you've used the SBA, haven't you?
I'm sorry, JoAnn?
I'm sorry, Sal. You, in some of your deals, you've been able to use the Small Business Administration in helping your clients sell or buy businesses.
Yes, that is absolutely correct. Usually, the deals happen in one of two ways. The SBA loan is certainly a great way to do it for people that have, I'm going to say the criteria to be accepted in the program, credit scores, maybe experience in the industry, whatnot. And then obviously the other way that these things sometimes get done is just strictly through seller financing. But absolutely, SBA is a very common, very normal tool to get these deals done. And I would encourage anybody that's listening and thinking of buying a business to explore the program. And I know later on in the program, John's even going to talk about special programs for categories of people like veterans and things like that, where it gets even better.
Okay. One of the things, John, that you said that is often confusion. You talked about preferred lender and non-preferred lender. Would you explain that a little more in depth, please?
Sure. Preferred lender would be the bank's lending department is actually approved by the SBA to basically give the SBA's approval on the loan, that they're in agreement that they will provide their guarantee to that loan in the event of default. So they get that through their experience over the years and, working with the SBA program and, being basically vetted out by the SBA prior to ever visiting with that particular customer. So it's good to, work with a preferred lender because they have a lot more experience in it. If they're not preferred, a non-preferred lender on each deal has to get that particular loan approved by the SBA, what's called central processing at the SBA.
Which is
and
another
it can take
step.
a lot more time.
Yeah. One of the things, and I'm sure Sal does this too, is that when I'm dealing with a banker and they say they're an SBA, they do SBA lending, I am very direct. Are you a preferred lender, or do my client and I have to do another step? That's really quite a privilege to be a preferred lender for a bank. Am I correct?
It is. There's the process you got to go to gain that privilege and also to keep it. So, someone could be stripped of their preferred lender status. So, that you're dealing with a reputable company that's going to do things, the way it should be done.
Okay,
and you don't have to worry about anything falling apart towards the end of the process.
Right. So you are generally on the other side, although sometimes I'm sure you're on my side too. When you're looking at taking a client to the bank, such as John, what are you doing to get your client either just, let's say, sell the business so that it's acceptable to the SBA? And John.
Okay, well, so like you said, from the selling side, it's the other party that needs to go to the bank and work with them to get the financing. But at least initially, from the sell side, we look at two things. One is the business generating enough cash flow that we think it will be acceptable to the bank in terms of, obviously, when there's a loan issued, there's going to have to be a repayment on that loan, principal and interest. So we kind of figure out those numbers and take a stab at saying, okay, there's enough cash flow here to do that, plus a buffer, plus maybe a reasonable salary for the new owner. So we try to at least make sure that those numbers line up so that there's no disappointment when they go to the bank. The other thing is some banks will actually look at the business before there's even a potential buyer out there, and they'll say, yeah, this looks like a business that we would be interested in making a loan on. And obviously, that's contingent of also then the other side of the transaction that they're happy with the buyer. But I always encourage my sellers to take that step because, again, you can go to the buyer and say, hey, Mr. Buyer, the business generates enough cash flow. The bank likes it. They're willing to lend. Now it's just a question of, can we get all the T's crossed, all the I's dotted? Do they like you? And you're getting closer and closer to doing the transaction.
It's really important. I know often my business owners, when they are selling, they say, well, it's a great business, but when you take a look at it, they haven't been taking money out of it. Or, someone else is the spouse is supporting the family while the owner has been pouring everything into the business and not taking his salary. And I know, John, from your viewpoint, you don't want the owner to starve, do you?
No, you got to make sure that that business is able to support their personal living expenses, as well as pay the debt for the loan that they're going to take on. Like Sal had mentioned, getting the bank to review the financials prior to putting it on market. It's something you could put in with your teaser information with the company, that I can put basically a little flyer within that states that, First National Bank would be, would have an interest in looking at this loan with an SBA guarantee. And it could give a little bit of a general description of how the loan terms would look. And that could be a nice selling point to the seller, because they know that a bank's already looked at it. So we at First National Bank are open to doing that, working with the sellers and the business brokers representing them to help put it to market for them, make it a more marketable company.
Yeah. And by the way, John and JoAnn, and again, I'll speak from my side, and hopefully this is not too much of a sales plug, but this is something that a lot of times buyers have a little bit of a hard time wrapping their head around. You may get a loan, and the loan may be for whatever, 3, 5, 7, 10 years, whatever the case may be. And let's say you buy a company that's $500,000 or $1 million, okay? And maybe because you're having to repay that loan, you're drawing what I'll call a modest salary. Mm-hmm. Again, you can live on, but you're not getting rich. But I always make the point, because I believe it's true. Don't forget, once that loan is completely paid off, now you're the owner of this asset that is worth $500, $1 million, hopefully what you bought it for, and a little bit more, because you've improved the business along the way. So now you've, again, at the end of that loan, or even in between, you have this asset that you can turn around, call me again, sell it, and put a nice fat check in your pocket. So don't forget that.
Yeah, I want to add something, and this is kind of tongue in cheek. I always say, stay married, stay with your partner. Make sure that everybody is in agreement on this, because building up wealth often means that one partner is carrying the load. And that, it's important that the family is all involved and in agreement. I wanted to go back to John, because we talk SBA. You are the direct SBA lender for First National Bank. So I wanted to ask, what, from your viewpoint, are the benefits to borrowers of an SBA loan?
There are quite a few. One primary one that usually helps a lot of people get into these businesses, lower equity injection. On a business acquisition or purchase of commercial real estate, the SBA, in most cases, with First National Bank, is only going to look for about 10% of the total, what we call total project, to bring cash. So, a conventional loan may require 20, 25% plus all closing costs. That 10%, when I say total project, is everything's rolled into it, and you got to come up with total closing cost of the business. Everything can be rolled into that, and you only got to come up with that portion of 10%. So it's a much lower barrier to entry for the business, for the individuals to get into the business. And you don't want to deplete all their cash, so you got to make sure they have working capital, which is the SBA is very good with providing additional working capital, whether it's just permanent working capital on top of the loan or a revolver. Because, as you know, the number one reason a businesses fail is lack of cash flow. 2-3 years down the road, they just weren't provided adequate working capital because they put it all into the down payment, getting into the business, and weren't given the working capital to keep it moving. So the SBA is very good at making sure that the working capital is there to put them in a position that they can succeed and grow the business. So that with it, it's over time. You just see businesses fail all the time because that lack of the working capital. Also, with an SBA loan, on a business acquisition where no real estate's involved, it's going to be a 10-year amortization period, no balloon. There's also no loan covenants within those loans. So, there's no restrictions on their distributions. Also, they're not balloon notes. They're fully amortized loans. With, like I said, on a business acquisition, 10 years. But if real estate's involved and the business acquisition, it would be a blended term, would be dependent on how much is of the purchase prices on the real estate and how much is on the business acquisition. But it could be 15 years, could be 20, all the way up to 25 years. If a business is just going as from a renter to a owner-occupied building, they would be able to have a 25-year amortization on their loan, so that it stretches out the payments longer, and gives a lower monthly payment. And then on a 10-year loan, there's no prepayment penalties by the SBA, other than just a 3-week notice that they're prepaying the outstanding balance by more than 20%. On a 25-year amortization, after 3 years, it's the same restriction. So there's no real prepayment restrictions on these loans.
No, that
so
is
it allows them to pay down. So they're able to get into the business or get into the real estate for a much lower amount of cash. Many people do lack that cash to get into it. And, so it gets them in there, and, it can even many years down the road just refinance it too.
Okay, when we talk about, do you often, as because I sit on the board, the Business Loan Review Board of the Urban Redevelopment Authority of the City of Pittsburgh, do you often partner with other organizations when you're putting together a loan? Because sometimes we'll have the owner putting in 10, 15%, we'll have the URA putting in another percent, and then we'll have the bank putting in a nice chunk, and then also giving some working capital. Do you often do that?
Yes, there are other organizations to partner with to help with some of the acquisition costs. The SBA does have some restrictions that the buyer has to bring at least 5%, and then the remaining of the 10% required could be from a seller note. And then you have other organizations that could help dilute the loan to value of the SBA loan from local organizations that are available, many different ones in many different cities that work closely with the SBA. And there's also organizations that can help them with their business plan. Like every city has what's called local small business development centers, or other business advisors in the area that allow that help people get their business plans together, help them think through the situations. So to answer your question, yeah, we often work with those organizations.
What about you, Sal, with your experience bringing everything together?
Yeah, we're willing to work with anybody that wants to work with us. Obviously, the more people you bring into the party, the more complicated it can get sometimes. But yeah, we'll work with anybody that wants to work with us just to get the transaction done.
Yeah, and I know later on one of our shows is going to be about bringing in some alternative financing to the point then that we can get the business stable, that then can come to someone like JoAnn. So I think that's be something that people should be, taking a look at in our future shows. And
don't forget, by the way, let me just mention this too. A lot of times, you may be able to tap, friends, family, investors, things like that for money. So, for people that are out there listening, don't forget that, again, that's a little bit tricky. That's a little bit more complicated. Uh,
Yes, it is.
yes, but again, just trying to lay out all the possible alternatives, because as John alluded, I think one of the biggest hurdles, and maybe this is obvious, is getting the money. So, again, friends, family, even investors could be a source at some point too, talking about, I'll even group them into non-traditional lenders, even though they're investors. But anyway.
And there's also a lot of people are not aware of their retirement funds that can be utilized to pay for the down payment for the equity injection. There's a program, we're not going to go into too much detail, called ROBS, that allows you to roll over your 401k and to help with or do the entire equity injection requirement with your 401k or other retirement funds. Allows, it's a program that's been around for many years, and many people, when I talk to them, trying to see where they're going to come up with the equity injection, they had no idea that they can use that. And it could certainly provide them with more information on that. I have some pamphlets, but also know some experts in that field who can gladly give them names of people that can help facilitate that. It's one that many people don't know. But the more cash the buyer brings to the table with their own funds, the better it looks in the eyes of the lender. The more they borrow, or the more they get gifted, it's sort of like to see them bring, basically, have skin in the game, so to speak.
Yeah. And John, just to clarify, because I know there's viewers out there with all kinds of levels of sophistication. When you're talking about rolling your 401k, and correct me if I'm wrong, but you also mean without a tax penalty, which I think is the real big benefit.
Yeah, that is exactly right. Thanks for clarifying that. You're not going to be penalized by withdrawing those funds early. So there's a lot to it, and there's the program is called a ROBS, ROBS.
That's where often I come in and I'm sitting down and saying, okay, where your commitment is, what are you willing to risk, what are you willing to do to get this business? Because when you do go into your other resources, you have to be prepared for that. And if you've been a corporate person all your life, it's a surprise at how much money it actually costs you to run a business. And that's my job. And often we stay with the business owner for over a year, helping him or her through that transition stage, so that they're sticking to the business plan, the strategy that we have developed, so that it's what can happen will happen, what can go wrong will, and Murphy is always finding a new way to mess things up. So that's one of the things I do with my clients, is really work them through and nurture them, so that when you've lent them the money and you've made a successful deal, we make sure that the deal working with our client becomes successful. So it's a good three-way transaction then. I wanted to ask you, John, what are the primary eligibility requirements for having a loan with the SBA?
One thing that another misconception is, it has to be for profit. Nonprofits do not qualify, or government agencies do not qualify for an SBA loan. They got to be organized for profit, located within the United States, and operating as a business. There are some size requirements because it is a small business association, but those actually end up being pretty large, as it has to have a net profit of more than 5 million to not qualify, and I think that's even over 2 years, and a net worth that needs to be less than 15 million. So generally, if you exceed those numbers, you probably are not really needing a loan anyways. So there's not too many times that I see that disqualify someone. So but there Personal credit scores, they're obviously looked at, but they're a lot less stringent than maybe a conventional loan. You could be in the lower 600 range even, and still it's just always a reason, and that a score might be lower. And with the SBA, you can find that the reason for that and find mitigating circumstances to overcome that discrepancy on their credit report.
Now, John, let me ask you a question, because I think this is also something that most people don't realize, and again, correct me if I'm wrong, but since every bank kind of looks at slightly different criteria, maybe slightly different underwriting, within reason, it's possible that a potential buyer goes to one bank and gets rejected for an SBA guaranteed loan, but then they go to another bank and they get accepted. So I guess maybe my comment, and I would ask you to comment, is, if you get rejected by the first bank, don't get discouraged. Try going to a different one that may look at the transaction slightly different and look at you slightly different.
That is totally true. With banks, they all have their likes and dislikes. Even on a conventional loan, certain banks are going to like types of loans that other banks won't. So not just within the SBA, it's across all loans with every bank in your area. But some banks will not be as high on the business acquisitions that lack the collateral that a conventional bank likes, even with the SBA guarantee. And that's also a big benefit that I didn't address earlier with an SBA loan is, lack of collateral. You have a business acquisition without real estate involved. The business assets of some professional businesses in those industries are very, very little value to it in the bank's eyes. So the SBA providing their guarantee helps alleviate that concern that a traditional conventional loan would have with their collateral of the business assets and their value of that collateral. So lack of collateral, SBA helps take that out of the equation and get those whether it's a high tech or professional businesses or just something that's primarily leasehold improvements, like a lot of franchises. SBA loans are very good at our SBA loans are a good fit for franchises that are just leasing spaces.
I wanted to throw something in because intellectual capital is often, it's difficult because we in the past have developed software called Price It Perfect, and I ended up having to put a lot of my own money into it. And it was very hard to get funding for intellectual capital. Is that still a problem, or are we taking more a look at that? Or
that can still, an SBA loan, really alleviates a lot of the value on those assets, whether it's intellectual properties or, just their systems don't have a whole lot of value beyond to that business. And that's where, the guarantee of an SBA loan helps the banks bridge that gap to get the collateral coverage that they're comfortable with. But to answer your question, it can still be hard to determine or put a lot of value to those types of assets. And again, where the SBA really comes in to, be a way, a mechanism to get this loan done, a vehicle, an avenue, however you want to say it.
Well, let's go to what the type of businesses that would be ineligible for an SBA loan.
Like I said a few minutes ago, anything that's not for profit or government agency, those are definitely ruled out. When a business is speculative in nature, like maybe somebody going to buy land and want to drill for oil, that is also can not be an SBA loan. Anything that's speculative in nature is a problem. More and more states are allowing gambling within their bars, and anything that more than 30% of their income is derived from Gambling could cause or will cause an SBA wouldn't be allowed to work with. And also, anything that restricts patronage, such as maybe some franchise health clubs that restrict to women only or men only, those would also be ineligible due to any kind of where they would have a policy that would not allow everyone to patronize their establishment.
Hey, John, let me ask you a quick question because there's one that you didn't mention, and I know there's a lot of activity in this sector right now, and it's a little bit controversial because a lot of states are making it legal, but it's still technically illegal at the federal level. So anyway, cannabis-related businesses, is that also one that would not be eligible for an SBA guarantee, or
that is true?
Would it?
And thanks for mentioning that. There's a lot of restrictions when anything cannabis is involved with the business. It would be ineligible. That was one I definitely should have mentioned. I did.
Yeah, no, that's fine. So because again, I know there's so many people looking at it right now as we report in May of 2019. So want to make sure that people that are looking at it realize that maybe that's one of the ones that's not eligible.
Yeah, and don't be surprised as rules change, as federal regulations differ with their views on cannabis related, that the SBA will probably follow suit with that as well. But for now,
I also noticed that you talked about no organization or business that primarily engaged in lobbying or any political activity is not available. So a marketing firm who specializes in political candidates really wouldn't be a good target for
that's true.
Yeah.
Anything within those the politics and lobbying industry can be SBA ineligible.
Okay. Sal, do you have any comment there?
No, what I was, and maybe I don't want to jump the gun too much, but do you want to talk a little bit about, because again, people think of SBA as sort of this one monolithic thing, but I know there's different programs for different demographics or different situations. So do you want to talk about maybe the different sub-programs within SBA that may be particularly attractive to an individual in particular?
Sure. I mean, there's quite a few programs. We could start to go through some of the primary ones and then drill down from there. There's a lot within it, and if you have questions, why I go through, certainly, interject. There's the primary loan programs. You have what's called the SBA 7A and SBA 504 loan program and the SBA Express. SBA Express, I'll start there, is for smaller loan requests, basically under $350,000. Now, those are really not as underwritten. They don't go through the underwriting as maybe as the larger loans in the Express programs. They try to make it a little bit easier and not require as much information, but they still provide a guarantee. It's just that a smaller amount. An SBA Express provides an SBA guarantee of 50% rather than 75% or more that can be available on it. But the loan amounts are certainly smaller. But you have the 7A and 504 loans. The 7A loan program, it can have an amortization for a business acquisition as low as 10 years, or when real estate's involved, it can go all the way up to 25 years. And those, they're probably the most agile, I'll call it, of the SBA loan programs. They're most flexible, and they are, utilized to, bridge these, could be just a bridge loan to help someone acquire the business with the less equity that we touched on earlier. But one we haven't talked about yet was the SBA 504 loan program. And that program, 504, that name was derived from, it's 50% of the loan amount is provided by the bank, 40% by a local, what's called a CDC, Community Development Corporation, and 10% comes from the buyer of the real estate. Now, the 504 doesn't do business acquisitions. When it's a stock purchase, there's a lot of things I'll just sort of gloss over. There's a lot of just try to speak in general high-level terms on these without going into too much details on what each program can accomplish. But 504s generally look at real estate, and it's 50% by the bank, 40 by the CDC, and 10 from the borrower. They have also a 25-year amortization, and just like the 7A program, you bring less money to it. But half the loan comes from the bank, and 40% of the loan comes from the local community development corp, which works with the SBA as well. And these loans, primary thing was just lack of collateral or lack of the equity you bring to the table. And those are the three main programs. There's so many things within it, like what they can accomplish and their benefits to each of them. You have the 7A, circling back to that, where it could be utilized for the business acquisition, whether it's an asset sale or a stock transaction, and then include the real estate with that as well. Within these loans, one of the biggest things that a big advantage that people don't think about is there's no low covenants with all these programs. They're not requiring businesses to handle their distributions at certain levels, and they can do what they want with their profits. And these without the prepayments too, you can pay away at these loans and get them paid down as quick as possible, or with longer amortization periods, slow as possible, to keep your cash flow and reinvest in that into the business. What you can do with your monies once your business is up and running, who knows what they could cost you with having unlimited access, or not unlimited access, more access to the working capital or the funds that you didn't have to bring to the closing.
One of the things because we have been talking over almost 40 minutes, guys.
Yeah, it goes quick.
Yeah, and we have so much more we could talk about.
I know.
So we're going to have to do it again, John. Very quickly, because this is where usually I'm involved in getting, and I know Sal's getting his client, but I'm involved in getting my client ready to apply for the loan. So what are the typical information that you're looking at to when I come with my client? What do you want us to bring to you?
A good starter package would be 3 years of personal tax returns, along with a personal financial statement, which a personal financial statement just basically shows what you own with money in the bank, as well as real estate and other investments, and basically assets, and who you owe money to, whether it's credit cards, car loans, student loans, the mortgage on your personal home, the personal balance sheet, personal financial statement. It's sort of a scorecard that shows how much you own and how much you owe other people. It gives the bank an indication of your financial wherewithal. And a lot of people might not have that strong a one, so it's not that important, but it's something that you want to have prepared to show your banker with your 3 years of personal tax returns. And if it's a business that you're acquiring, you want to look at 3 years of that business's tax returns, along with their year-to-date profit loss statement, their balance sheet, any debt schedule on that business, and their account payable and aging. Every business is different, so they're going to ask for more information on some businesses and less on others. But that would be a good starting package, all of those things. There's certainly going to be more information, but reviewing that would be starting point to see if there's interested on from the bank's perspective on if they would like to dig a little deeper.
Hey John, let me ask you a quick question there, because I know a lot of times one of the requirements is putting together a business plan and a financial forecast. And JoAnn and I have talked about this, and I think we're both very thorough in trying to do our business plans, or helping our clients do a business plan, and helping our clients do a financial forecast. But for you, from the bank's perspective, in the context of everything else you mentioned, how important is this? And maybe to fine tune it a little bit more, just a gut feel of what percentage of loans have gotten rejected because the business plan or the financial plan, the financial forecast just didn't pass mustard, and that was the primary reason for having a loan rejected.
Oh, certainly a business plan is a very important component, especially if it's a startup, because there's no other barometer to measure the future success of this, loan request and the business that they're going to utilize with this loan. So a business plan is very vital, along with those projections. As a bank, we're going to look at, do these make sense? How much thought have they put into this process? Whether for it to being a startup, but it still holds true if you're acquiring a business. Have you thought about, management replacement, any salaries that would have to, might take on more of it, because some of the people that the positions they held after the acquisition wouldn't exist, or they would move on to something else. How are you going to replace them? Has all of those things been thought out? And how's that work within your projections, and does it still work with the debt that service that's going to be required to pay back this loan, as well as your personal living expenses and all that? Does all that make sense? So, but to answer your question, yeah, it's very important. With the acquisitions and business startups, it's very vital, and it can be a deciding factor, and it could be shows their level of competency too, as well, of their ability to run it, of how they put it together. Now, it's certainly good to seek out help from a mentor or a program, government program that's out there to help you assist with developing these. There's nothing wrong with doing that, but certainly be involved. You don't want to just have them do it for you, because you're taking on this debt. You want to learn as much as you can about it.
Okay. Gentlemen, this has been fascinating, and I know we could we could chat and chat, because we've all been in part of deals. We all want to make them. We all want to make small business owners successful. But in the interest of time, Jon, we're definitely going to have you back.
Yeah, I look forward to it.
Okay, Sal, how about giving yourself a little plug there, and how people can get in touch with you, and then I'll be to you, Jon, and then I'll do a wrap up here.
Sure, absolutely. Thank you. And so my name is Sal Acosta. I'm with Landon and Acosta, LLC. We are business brokers. We help people buy and sell businesses. Typically, we're on the sell side, as JoAnn mentioned. And to get a hold of me, it's as easy as you can call me on my personal cell phone. It's area code 484-358-9470. Again, 484-358-9470. For those that would prefer to email, my personal email is Sal, S-A-L, 459@yahoo.com. Again, Sal, S-A-L, 459@yahoo.com. And thank you both very much.
Okay, and Jon, what's the best way to get a hold of you?
Good. Thank you for allowing me to join you here today. I really appreciate it and look forward to continuing it. But a good source of information, we have a website for our SBA division. It's fnbsmallbusiness.com. So it's www.fnbsmallbusiness.com. It has a lot of success stories that for deals we've funded over the years, as well as some videos too, of some testimonials from customers that we've helped. But I can also be reached at 412-216-3156.
I just wanted to ask you, and how far do you go in your footprint? Travel folks to clients, Jon.
Right at this time, basically east of the Mississippi. from Chicago down to Louisiana, Georgia, over to Georgia, and up to New York, and everywhere in between. That's where we're at currently, but one day we might just be nationwide.
Great. Sal, what's your footprint? How far do you go?
Basically, I am in St. Clairsville, Ohio, which is the very eastern edge of Ohio, about an hour south of Pittsburgh. And I do a 2-hour radius. So that'll be Pittsburgh, north of Pittsburgh, Westford Cranberry, down in West Virginia towards Morgantown, also Monroeville in Pennsylvania. And then Cleveland, Columbus is the hairy edge of that 2 hours around the eastern edge of Ohio.
That's a pretty large target there. And this is the Empress of Biz, JoAnn Forrester. We love to talk to you, and our telephone number is 412-440-6969. 412-440-6969. You can also contact me, empressofbiz@gmail.com. empressofbiz@gmail.com. We're on Facebook too. Empress of Biz, Listen, Learn, Prosper. Gentlemen, I have really enjoyed this conversation. Jon, we're going to have to get together, and the three of us can share war stories. And people, you want to hear this. You want a deal to last. You want your business to be successful. You got to listen to the three of us. We got some good advice. Thank you, gentlemen. And Sal, you want to do a sign off? Anything else you want to say?
No, just want to encourage anybody that wants to delve into these topics further. Obviously, if it's from the banking or the SBA side, please contact Jon. If it's somebody looking to buy a business, then please contact JoAnn. And if there's any business owners out there thinking of selling their business, it's never too early to start the conversation. Even if you're thinking of selling 1, 2, 3, 4, 5 years down the road, I don't mind. Let's start the conversation now, because I can give you some ideas of things to start doing now to make it as easy as possible to sell when you're ready. So please give me a call.
Jon, thank you for your time and your knowledge. And gentlemen, let's have a great and prosperous week. Thank you.
Thank you, JoAnn. Thanks.
Thank you. Thank you. Bye-bye.
Bye-bye.
This conference will now be recorded.